The only thing that the Federal Reserve is able to do at the moment to keep this going is to keep saying gold producers, if they can deliver better operating performance, then we will see a recovery. Otherwise, I think the money is going to go into the explorers.
Hello and welcome back to another episode of What's Not Priced In. And as viewers can clearly see, today we're joined by Mr. Gold himself, Brian Chu. Brian, welcome back to another episode of What's Not Priced In. How are you?
Hey, Kirill, and say hi to everyone else. I didn't expect to be back
So
in two
soon?
months. I thought it would be a couple more months because I wanted a bit of time for
hmm
maybe my predictions to hopefully age. And
hmm
yeah, I guess you caught me right here when gold's somewhat down, but my mood is definitely not down.
Well, there you go. That's a nice statement off the bat. Well, I wanted to get you on the show because in Australia, you are the guy for gold and for analyzing gold. I think you have your own methods and methodologies in analyzing both the gold sector and individual gold stocks. So I want to get to all of that during the show. And I think maybe the heart of the show this episode is your take on gold explorers. You're more bullish about gold explorers than you are producers, but we will get to all of that later in the show. But I thought we would start a bit broader and then we'll funnel down towards the gold explorers in the end. So I thought I'd kick things off by quoting you in your recent writings, and you started off strong there. So I'll quote it to the viewers. I can't quite think of anything the market finds beneath contempt right now than gold stocks. More specifically, gold explorers and early stage developers. The market doesn't hate it, it's beyond that. You only hate something you care about, right? The market treats them as if they don't exist. The top seven stocks on the Nasdaq are, serially setting records, and major cryptos are trading well above their 2022 nuclear winter levels. Why would you even care to cast your eye on the gold explorers? Well, they're all good reasons for people to ignore them, and that's why I've been buying. So that's a nice little intro there for the viewers. And clearly, a lot of attention has been going to Bitcoin right now and stocks like Nvidia, Microsoft, Apple.
Hmm.
Uh, Not a lot of attention on gold. And some people may think there's good reason. So I think maybe I'll get your thoughts on that. So you have obviously your own proprietary index that you sort of use to measure gold stocks, especially juniors. So why don't you sort of share with us how that has been performing, especially given where the Aussie gold price is?
Yep. And I'll probably give you guys a little bit of context about what you quoted just then, Kirill. I was actually, I wrote that article at around 4, 5 a.m. On, I think it was early Tuesday morning.
hmm
And the reason why was that I actually had quite a bit of, so I went to sleep at about 11 o'clock that night, and then had that 4 hour cycle, and I woke up and I thought, okay, I feel like writing something about gold stocks at the moment, and I thought, what better way to talk about what's happening with this space and look at the ones with the most opportunity, which is the gold explorers. Now, I'll share with you guys the index which
hmm
Kirill just talked about. It is the Speculative Gold Stocks Index. You
hmm
won't find it anywhere else because it is something unique to me. Um, I created that with the help of my analysts, and
hmm
the rationale behind it was um, so those who are subscribed to me on my Australian Gold Report and Gold Stock Pro would have heard me talk in the past about Takoa da Silva.
hmm
This gentleman is now working, I think, in Fidelity Investments, but about 10 years ago, he had his own website called Bull Market Thinking.
hmm
And he created something called, I think it was the Legend Mind Builders Index, which was him following the performance of the companies that were owned by, I think, Brian Lundin, Eric Sprott, Rob McEwen, Bob Quartermain, and a few others. And The idea was that he was looking at the biggest winners, and he wanted to track their performance and compare that against the commercial indices that we've got, such as the GDX index, the ASX Gold Index, the Huey Index, which is a New York Stock Exchange Arca Gold Bugs Index, and also the XAU Philadelphia Gold and Silver Index. So I thought, okay, I'm in the gold stock space. We've got the ASX Gold Index, but no one is able to capture what's happening in the Gold Explorer and early stage developers front.
Hmm.
So I've got access to Refinitiv Icon,
Hmm.
and my analyst and I set to work choosing about 70 explorers from the ASX going back to 2005,
Hmm.
and using the typical approach of that most index builders do is they track the performance by market capitalization. The companies that go bankrupt are eliminated. Those companies that become producers, we actually remove them off the list because we don't want to track those anymore.
Yeah.
And this is what we've got, the Speculative Gold Stocks Index, which is the small explorers and developers. As you can see, performance in this is not particularly great since 2005.
Hmm.
And one lesson that I think is worth talking about quickly here is that explorers and developers are not buy and hold
Yeah.
shares. If you bought and held them from 2005 till now, you've got about 20 cents in the dollar. Not a good investment. But why do people dabble in this space?
Hmm.
Very easy, because look at the period from 2008, this October, to about October 2009, and also in 2010, 2011, as well as in early 2016 to mid 2016, and of course in March 2020 to November 2020.
Hmm.
Those big spikes are because there was a massive run up with gold explorers, and those are what we call the manic phases of a gold bull market. So in a gold bull market, gold price moves in a cycle,
Hmm.
and it's the larger, more established producers that move first. Then it's the mid tiers, then the junior producers. Then at the end, you have the explorers catch up as the crowd just piles into these stocks after having watched. So what they do is they watch gold go up and go, man, nothing really special.
Hmm.
Producers go up and they go, well, yeah, I'll go and catch a bit of that. But it's the explorers that that go bananas,
Yeah.
because they might be 20-30 million dollar companies, and in the mad rush for returns, people eventually go and buy these up, and they might be worth 300-400%, sometimes
Hmm.
1,000% or more. And like they deliver those types of spectacular returns. And I thought I'll capture this index because it will
Hmm.
help me to time what would be a suitable time not to buy but
Hmm.
to sell.
Hmm.
Because in the buying process for explorers, and we'll probably cover this a bit more in detail, but
Hmm.
it's worth noting that with explorers, it's like farming. You've got to be patient in the sowing, but in the
Hmm.
harvest, you have a short time period, and then you've got to capture it. So we can cover a bit more of that, but I thought I'd let you move on to the next question.
Yeah. So actually, I think want to take a step back a bit, and obviously, one of the regulars on the show is Greg, and he's also into gold as well, and he has some gold in his portfolio. And we were sort of talking with each other before he came on the show, and so he had some questions he wanted to ask you, and those questions revolve around the high elevated Aussie gold price. Now, the gold price has been pretty strong this year over the last 12 months, but gold stocks themselves haven't really, both the producers and the explorers. So I
Hmm.
think the question that Greg and other investors in the gold sector would have is, why has there been such a divergence between the Aussie gold price and the gold stocks and the miners and the producers?
Yeah, and that's a really good question. It was something that I found quite baffling for some
Yep.
time too, and I was trying to reconcile it. So let's have a look at what is going on with the um, Australian dollar
Hmm.
price of gold and the US dollar price of gold. So the green line shows you how gold has performed in US dollar terms since
Hmm.
the beginning of last year. And it's actually been drifting up, and from about March
Hmm.
till May last year, when it actually hit $2,000 once more, and that was coming off of the collapse of the various banks. I think your SVB and
Hmm.
also First Republic, and for a while that crisis itself was averted,
Hmm.
but you had also the Federal Reserve was coming off of raising interest rates, but because they kept saying that they're going to keep interest rates high for longer, all the way till around late September, gold drifted down once more. And just before the Israel and Palestine conflict, gold actually went back down to about $1,810 an ounce. And at one stage, we had quite a number of traders talking about $1,600, $1,500
Hmm.
gold. For a while, it looked like it was going to that was going to happen, but with what happened on the 7th of October, very sad event. Like that actually changed the game quite a bit because there was the war premium
Hmm.
that pushed gold back up to 2,000 US dollars an ounce within the space of 2 to 3 weeks.
Hmm.
Um, and while that war premium slowly dissipated because it was an expectation that the conflict was going to generally remain within that region rather than escalate further, you had Jerome Powell start talking about how they are thinking that interest rates are they're done with raising interest rates and they're
Hmm.
thinking to cut. The market went ahead of itself and started saying, well, you know what, in early December, they were pricing in a March rate cut. So that would be next month. And the
Hmm.
price of gold suddenly spiked up to 2,130 US dollars an ounce. It peaked during December. We had a good Christmas, and I was looking forward to 2024 being a continuation
Hmm.
of what we saw from October to December. Except Jerome Powell came out to say that, oh, maybe the economy looks all right. You also had the December CPI data and the December jobs data come out, and that was pointing to a recovery in the U.S. economy. There might be a soft landing, and the market started pricing the delay in the interest rate cut, and gold started stagnating in U.S.
Hmm.
dollar terms. So you could see it from that. There is a bit of a trailing off. But meanwhile, in Australian dollar terms, even though gold has actually pulled back somewhat below 2,000 US dollars an ounce, gold still remains above 3,050 Australian dollars an ounce. And the reason is because the Australian dollar has continued to weaken
Hmm.
throughout last year. Now, our economy, even though our interest rates, the RBA is signaling that they are unlikely to cut interest rates as early as
Yep.
the US Federal Reserve is, I think there are more pressures on the Australian dollar because we're still considered a commodity backed currency.
Hmm.
And the Australian, like our exports on commodities, I think we're receiving less
Yep.
in revenue because commodity prices have largely pulled back. Most base metals are down, copper's down, aluminium's down. Um,
Nickel.
and iron ore is up, but that's
Hmm.
more an exception than the rule.
Yep.
You have also our economy is generally the inflation still remains, but jobs growth I think is not as positive looking from a headlines perspective than the
Hmm.
US. So most people are flocking to the US dollar for safety. The market is pricing in to perfection that the economy is going to recover. The Federal Reserve is not going to need to cut rates to give the
Yep.
economy a kick. And that's why gold has become slightly less appealing once
Hmm.
more as a safe haven compared to US dollar, which pays high interest rates
Yeah.
relative to gold, which doesn't pay any interest rate.
Yeah. And on to the question of, given how high the Aussie dollar in gold is in Aussie dollar terms, there's a lot of Aussie producers out there who obviously can mint cash at these prices. So why have the producers, for example, not been performing that well?
Yep, and that's a tough question.
Hmm.
I wish I have an answer that would be satisfactory. And I think even if you ask the management of
Hmm.
most of these gold producers, when do they expect things to improve? I think
Hmm.
most of them, their guess is as good as anyone's. Now, the December quarter,
Yes.
um, I personally thought that there was a lot to be desired.
Hmm.
For about 6 or 7 quarters, I would say, gold producers have largely underperformed
Hmm.
in that they delivered less gold than they had expected,
Yep.
while costs have actually escalated. Now,
Hmm.
there were reasons that you would be able to let them off the hook for the
Hmm.
2022 June, September, December, 2023 March, June, September
Hmm.
quarters, because we had seen the price of oil go up to as much as 120 US dollars a barrel in June 2022, and gold also had a bear market run from about
Hmm.
2021 to late 2022 when it was trading at about 2050 US dollars an ounce from,
Hmm.
sorry, August 2020 to as low as about $1,610 in about September, October 2022. So they had a margin squeeze. You
Hmm.
also had the lockdowns that caused border restrictions, labor shortages.
Yep.
And with mines, the difference between a mine and working in an office like you and I, we can switch off the lights and we
Yep.
can go home and work off our notebooks. You can't work in a mine. You can't work off a notebook managing and digging a mine. Neither can equipment operate without
Hmm.
regular maintenance as you would in a home office. So mine properties were working under skeleton staff,
Hmm.
and they were doing their utmost best, but they had to kind of kick maintenance and
Hmm.
repairs to the side, and that all that catches up.
Hmm.
So by the September and December quarters of 2023, while the oil prices have come down quite a bit and we've been trading at about 65 to $80 a barrel the second half of last year, and
Yep.
gold moved up, um, the problem still persisted with producers. You had machine breakdowns, you had
Hmm.
difficulty in accessing higher grade ore,
Yep.
etc. So even the largest producers were still struggling to keep their costs
Hmm.
below 1,500 Australian dollars an
Hmm.
ounce for the all-in sustaining costs. In fact, the industry average at the moment, I think, is about $1,800 to $1,900 an
Wow.
ounce, and that is actually a real problem because
Hmm.
you actually can't, even though gold is trading at about $2,800, $2,900 an ounce for
Hmm.
much of last year,
Yep.
we actually are seeing a lot more, what do you call it, maintenance expenses.
Yep.
Um, and that's actually kind of cutting into the company's cash
Hmm.
balance. So, with underperformance of most producers, shareholders can only be forgiving for
Hmm.
a certain time before they start saying, look, this is not on.
Hmm.
And we can't just keep hearing excuses. And
Yep.
the market is less forgiving than I am. So I personally, even though I've adjusted downwards my
Mhm.
expectation of what I believe the fair value of the the ASX Gold Index
Yeah.
should be, is currently trading at about 6,500, and my estimate back then as fair value was about 7,500 points.
Mhm.
I've moved it down to 6,800 to
Mhm.
7,200. So we're still 10%, 12% below the fair value, but
Mhm.
I'm still not. I'm still waiting for much better news to come out before I'm willing to say that everything is nice and bright, and that the producers would be poised to deliver performance that would
Mhm.
justify the ASX Gold Index moving back up above 8,000 points.
Mhm. Yeah, I think that's really interesting because maybe some investors think, oh, it's all about the gold price, and
Mm,
the higher the gold price, the better the gold stocks will be. And I think we talked about this
yeah.
the last time you were on the show. Gold stocks, in the end, are also businesses. Yes, they deal primarily in a commodity, and where the price of that commodity is important, but as a business, they have business imperatives. If they don't have enough labor, they will have to pay more for that labor, and that raises costs. And obviously, this is a market as well, so investors clearly baked in a lot of high expectations given where the gold price was, and I think maybe some gold producers maybe exacerbated those expectations and maybe over promised and under delivered, and that is probably the worst thing you can do as a stock market, as a stock on a stock market, because
Mm.
prices are all about expectations. And if you set high expectations and don't deliver on them, the market will punish you. And as you said, the market is less forgiving than you are.
Yeah, in this case, and the reason is that we had. So normally the gold price cycle lasts about 3 to 5 years,
Mhm.
and the gold stock cycle is similar to that. Um, the fact that gold has drifted up, whereas gold stocks have actually drifted down,
Mhm.
that I think is where investors increasingly became uneasy,
Yeah.
and to the point where if you go to Hot Copper and other stock discussion forums, just as a good
Mhm.
indicator of market sentiment,
Yeah.
not necessarily on whether you should follow them to invest. As Greg's also pointed out, and a few others, hot copper sentiment would be a
Mhm.
great indicator for you to go
Mhm.
contrarian. But you could go to look at some of those discussion, and they're getting toxic. I
Mhm.
recognize names there which they have been um, in this space for quite
Mhm.
some time. And even those who are quite forgiving, like myself, if they try to talk up a company and say, give them the benefit of
Mhm.
the doubt, there's positive development.
Mhm.
And I personally see that there's positive development, especially in
Mhm.
the explorer space. You
Yep.
got all these detractors going in and just basically slamming them
Mhm.
and calling them shills. And there are
Mhm.
some which are accusing the user as being an insider of the company, or you're the
Mhm.
CEO of
Yeah.
this
Yeah.
company and you're just pretending, you're just typing all this to puff yourself up.
Mhm.
Um, this is how bad it's gotten
Mhm.
in this space. Even though if I show you the ASX Gold Index on the screen now,
Mhm.
you will agree with me that it's not really a bearish market by any stretch of the imagination. Um, Let me just put it up. Here it is. So the ASX Gold Index, since the
Mhm.
beginning of last year, it had a really good run from March last year at about
Mhm.
5,800 points, I think it was.
Mhm.
And it went up all the way to 7,800 points within a month or so. And it actually peaked at about 7,800
Mhm.
at on the same day as it did in 2022, just before things started going pear shaped. And we had a
Mhm.
bit of a repeat of
Yeah.
2022 last year, and it bottomed again in October, but for different reasons. And since then, we staged another recovery from October to December. and then just as 2024 came in, it seemed like the air came out of the balloon,
Mhm.
and we've just had another slump of about 15% or so.
Mhm.
Now, we've okay, if you look at that and you're not a trader, you're not a day trader capturing
Mhm.
going in and out of the market within weeks, you would probably be absolutely, I'd say, flabbergasted and
Yeah.
even exasperated by this market, because it's like just as you're about to put put on your gold chain and say, yeah, gold stocks for the win. It's like, well, there it is.
Yeah.
And I get my subscribers writing to me asking, hey, so can you comment on what's going on with this deal or with this
Mhm.
particular transaction? There are some good news coming out of these companies. There's mergers, there's mine purchases, and
Mhm.
they're supposed to be pretty good news. And yet the market just seems to be completely, they might be at best uninterested, so the price doesn't really move,
Yeah.
or at worst, they suddenly fall about 10-15%, which we've
Mhm.
actually seen with Silver Lake Resources
Mhm.
when they announced the merger with Red 5. It's
Yep.
just there's every excuse for the market to just go, nah, I'm not happy with this. I'm going to dummy
Mhm.
spit, dump the stock, and create that almost vicious cycle downwards once more. Now, for value investors like myself and those with patience and have lived through these
Mhm.
bull bear cycles,
Yep.
I'm sitting here and going, the only thing that I'm frustrated about is that I don't have enough liquidity to just plow
Mhm.
in more on these deals as people are selling. I'm actually going, well, thank you very much. I
Yeah.
like to get myself into this action. And
Yeah.
the last 2 or 3 days, I managed to um, get access to some liquidity without borrowing, mind you. And I managed to go and quietly bought in. Um, and I'm looking forward to reaping the rewards. I don't know when.
Mhm.
I've stopped putting a timeline to it,
Mhm.
but I know from experience that those payoffs are going to be big when they come.
Mhm. Now, you've mentioned Silver Lake Resources and mergers as well. So I thought we could shift our attention a little bit to that
Mm,
because when stocks aren't performing well or they're a bit depressed, then some of the big players do think it's time to strike and maybe consolidate or snap up a junior or snap up a resource. Um, so I want to get your thoughts on the merger space in the gold sector as a whole. But before we
mhm.
get to that, I wanted to get your thoughts on the Silver Lake merger with Red 5. What did you make of it? Did you think it made sense or did you think it didn't make sense?
Yeah. Okay. So I think it was about a week, 2 weeks ago
Hmm.
when this announcement
Hmm.
came out into the
Hmm.
market that Red 5 and Silver Lake Resources, both mid tier gold producers with most of their operations in Western Australia,
Hmm.
and their market caps of similar amount. Red 5, I think at that time was worth $1.1 billion market cap, and Silver Lake Resources was worth about almost, I think about also $1 billion. But the
Hmm.
difference is that Red 5, they have a single mine, King of the Hills, and they've
Hmm.
got a satellite in Darlot,
Hmm.
which also has a mill which is on care and maintenance. They, I think they had about $100
Hmm.
million of net debt, so
Yep.
they're still owing cash. They're still owing their lenders, whereas Silver Lake Resources, they have two small operations:
Hmm.
Mount Munga,
Hmm.
Deflector, and Sugar Zone, which is currently in care and maintenance in Ontario, Canada.
Hmm.
Now they got 370 million dollars of liquidity. I think it went up to almost 400, over 400 million from the most recent quarter. So you got a cash box with a three smaller mine
Hmm.
operations, and you got a one single big mine operation, but a company that actually is needing would look forward to more cash in order to pay down their debt. Now, these two um, merging together, I think,
Mhm.
makes a lot more sense than the market is giving them credit for.
Yep.
In the immediate term, you could argue that there isn't much immediate synergies between
Mhm.
them because even though they are operating in neighboring regions, there isn't
Mhm.
any immediate overlap. But they have a complement. They have complementary skills. Red
Yep.
Five has more expertise in open pit mining.
Mhm.
King of the Hills is one of the largest open pit operations in Western Australia, or at
Mhm.
least in terms of a new one, is producing about 200 to 250,000 ounces of gold, and I expect that to be for the next, I would say, about 15 years. Whereas
Mhm.
Silver Lake Resources is an underground expert. Mount Munger, Deflector, and Sugar Zone are high-grade
Mhm.
underground operations.
Mhm.
And Silver Lake has made their money in the last 15 years on high-grade underground
Yep.
operations. They
Mhm.
bought Egan Street Resources in, I think, 2019,
Mhm.
which allowed them to own Rothsay. They merged with Dore Minerals, which had the Andy Well and the Deflector underground operations. And they bought Hard Gold in 2021, which allowed them
Mhm.
to take ownership of Sugar Zone. They were vying with Genesis Minerals last year to buy the Gwalia operations from St. Barbara. And
Yep.
of course, Silver Lake tried to break it, tried to actually go into the wedding and stop it just as they were about to exchange rings. Unfortunately, that didn't happen. They did make a bigger offer on cash, but
Yep.
Genesis Minerals and Silver St. Barbara said that not where we don't want you into this party. Stay out. And Silver Lake packed up their bags and went their way, and
Yep.
instead went and paid 11 $130 million to buy 11% of Red Five. So I saw that deal coming.
Mhm.
Was it a good? Is it going to be a good deal? I think it's better. It's a better deal than what the market thinks. And
Mhm.
the reason
Mhm.
why is, as I said, complementary skills. They one needs cash, the other has plenty of cash. The
Yep.
only downside you could say is that Silver Lake Resources could have gone and bought something um, for a better for a better price, perhaps you could
Yep.
say, because the market did actually sell down Silver Lake
Mhm.
Resources on the deal, suggesting that they were hoping that there will be a better
Mhm.
use of their cash. But from a valuation perspective, from a medium term perspective, and from a sustainability of
Mhm.
their business perspective, this was a very sensible deal. When you've got a company that now has 400 to 450,000 ounces of gold per year
Mhm.
production, you're filling the gap that was made when St. Barbara sold out
Mhm.
their Gwalia mine to Genesis, and Genesis is yet to fill in that gap. And I also
Mhm.
believe that with those operations, and they're quite profitable,
Mhm.
um, you would see Red Five and Silver Lake Resources slowly grow and
Mhm.
become like a large producer down the track. It might even do a deal down the track with Ramelius Resources,
Mhm.
Genesis Minerals, West Gold Resources, Spartan Resources in that area to consolidate the Leonora and
Yep.
Leverton region, and that could become a major operator that could produce that could have a run for the money
Mhm.
for Evolution Mining and Perseus Mining.
Mhm. Wow. Well, and also as if anyone is a subscriber, I think you had a really nice breakdown of the whole merger where you actually looked at both of the companies, their costs, their resources, how effective they are at mining, how efficient they are, and whether there are any synergies. So I do highly recommend anyone there because I think that's why I love reading your stuff. You don't just talk about the wishy-washy macro stuff. You
Hmm.
really look into the dirt of it all and you analyze the balance sheet. And sometimes it's weird to say, oh, gold stocks, who cares about the balance sheet? But you really put it all together. You assess the balance sheet, the finances, what's in the ground, and how what's in the ground actually relates back to the balance sheet. So I commend you on that. But
Thank you.
uh, uh, I have a question maybe based on that. So I don't want to put you on the spot, but you said you said you were disappointed with the December quarter. You did mention that uh, valuations for gold stocks aren't as high as maybe some would assume, given where the gold price is. So, do you think there will be more mergers and acquisitions in the next 6 to 12 months as the big players sort of look to take opportunistic, as it says, opportunistic offers and swallow up the small fry?
Yep. And you're giving me the opportunity to show off another of my unique
Yes.
measures and metrics to support
Mm-hmm.
the case. Now, yes, you're right that I was quite disappointed with the December quarter results, and the
Mm-hmm.
market has shown this significantly and you can track it with this indicator, which I call the Gold Stocks Valuation Index. I'll give a
Mm-hmm.
bit of background about
Yeah.
how this
Yes.
works. The Gold Stocks Valuation Index, I captured um, the ASX Gold Index. So the index I
Mm-hmm.
captured that is tracking the performance of producers and more established gold developers
Yep.
in the on the ASX, and I compare that against the key drivers of profit and value in
Mm-hmm.
this space, which I believe is a price of gold by itself,
Yep.
and the future profitability of the companies as measured by the gold to oil ratio, as in
Mm-hmm.
how many barrels of oil can 1 ounce of gold produce. Now, the index is between 0 to 100% because, and I'm going to talk a little bit about statistics.
Mm-hmm.
I actually use something called a rank sum index. So I look at the last 20 years or so of
Mm-hmm.
performance, and I'm capturing how how exuberant or
Yep.
how out of favor these
Mm-hmm.
gold stocks are relative to their value drivers. And
Yeah.
if it's between 40 to 60%, then the market is generally pricing incorrectly
Mm-hmm.
the the future earnings potential of these
Yep.
gold producers. And if it's above 75% or below 25%, then the market is either excessively
Mm-hmm.
exuberant
Mm-hmm.
on on pricing these gold producers for their future potential, or they're undervaluing it because for whatever reason. And since the beginning of this year, it's this index has fallen out of the bed and is in the undervalued region, not at the ridiculously undervalued region, and
Yep.
that is where I'm. That's why I'm actually excited, even though I'm disappointed with
Mm-hmm.
the performance. The market has definitely uh, shown its disappointment, but I think it's overdone.
Yep.
And because the sentiment is so low, I would say that the producers, the larger companies, are on the hunt to look
Mm-hmm.
for very cheap companies and mine assets to purchase. So last year we
Mm-hmm.
saw, of course, Newcrest and Newmont merge, and then we had a few um, acquisitions such as Ramelius Resources buying Musgrave Minerals. We
Mm-hmm.
also had Northern Star buy Strickland Resources, one of
Mm-hmm.
their mines. And we also now had the Red 5 Silver Lake Resources merger. Now, in the last month or so, I also saw some of my recommendations,
Mm-hmm.
my Explorer recommendations on my premium subscriber newsletter. They received either takeover offers, or they merged,
Yeah.
or someone's interested in their minds. Now, I'm not going to reveal the names of these companies because if you want to know more, you will have
Mm-hmm.
to you should sign up. But some of you might already be aware of these companies
Mm-hmm.
already, and well done if you have bought into them, even if the market hasn't priced it in. I
Mm-hmm.
expect that this to continue because despite the difficulties and the challenging conditions producers have gone through these last 2.5 years, um, our I could show you guys
Mm-hmm.
that most of the larger producers were growing their cash balance from their operations during these 18 months to 24 months. So if you look at Northern Star Resources, West Gold Resources, Ramelius Resources, Silver Lake Resources,
Mm-hmm.
I'm highlighting these companies especially because they really built a nice cash pile over
Yeah.
this period. Evolution Mining, on the other hand, as they were growing their cash pile, they immediately went to buy things from the market. They bought the rest of Ernest Henry,
Mm-hmm.
so they own it fully. They also bought North Parks at the end of last year
Mm-hmm.
in order to build their empire. Um, so all these larger companies are making acquisitions. In fact, if I rattle off the list, almost all the large and mid-tier
Mm-hmm.
producers have done something.
Wow.
So Newcrest Newmont, Northern Star bought Strickland Resources, one of the mines from Strickland Resources.
Mm-hmm.
Perseus Mining is making an aggressive bid for OreCorp.
Mm-hmm.
Regis Resources bought Tropicana back in 2021. Then instead of buying anything else, they spent $98 million to close off their hedge book,
Yep.
which was a really good move.
Mm-hmm.
And it's just to digress a little bit, it is a sign that these insiders are expecting a high gold price.
Yep.
Capricorn Metals did the same.
Mm-hmm.
West Gold had tried to make an offer to buy Spartan Resources or Gascon Resources 2 years ago.
Mm-hmm.
They lost out to Ramelius Resources on Musgrave Minerals,
Mm-hmm.
but I think they're on the prowl to expand going forward.
Mm-hmm.
And I think on the target might be Spartan Minerals or Great Boulder Resources or Odyssey Gold in that Meekatharra region.
Mm-hmm.
Silver Lake Resources, of course, they tried to buy St. Barbara, St. Barbara's Squalia, then they merged with Red 5. Ramelius, we talked about Ramelius Resources. West African Resources.
Mm-hmm.
West African Resources bought Kiaka, I think in 2020, and
Mm-hmm.
then now they are developing and bringing that to production next year. And Tieto Minerals, they're going to develop the AP, the second operation near the Abuja mine. So that's probably going to start producing at the end of next year. And of course, Genesis Minerals, that just suddenly came out of nowhere from a $50 million company. Then Rayleigh
Mm-hmm.
Finlayson came in and uh, put in, I think, $16 million into the company. Bought out Dacian Gold, then bought Gwalia, and now they're digesting it. Oh, and they also bought one of the deposits from Kin Mining and paid $53.5 million for it. So lots of things are happening on this front, and I'm expecting more to come in the next half a year to 12 months.
Well, I think the last 3 or so minutes just has to highlight why I just called you Mr. Gold, because the amount of knowledge that you've just reeled off, you know everything about this industry. So kudos to you. But I was just
Thanks.
thinking, so you have the proprietary speculative index, you have the
Hmm.
proprietary valuation index. Do you have any other ones? Just out of curiosity.
I think I pretty much showed everyone.
You showed all your cards.
Yeah, I showed the tools. I just
Yeah.
haven't yet delivered on these tools the last 2.5 years, and I do not hide behind that
Mhm.
because I always believe and an honest person is one that you can also trust. And
Yeah.
I mean, I've delivered on two past gold bull markets, so I'm on to my third.
Mhm.
So with these tools, I hope to deliver an even better set of results in
Mhm.
the third gold bull market that I believe should be coming up soon.
Yeah. Well, before we go, I think we might as well talk about what you're predicting is the next bull market in explorers, not
Yeah.
necessarily producers. So I wanted to get your thoughts on exactly why you're focusing right now on explorers versus the producers, and then maybe we can talk about, you think explorers are so undervalued at the moment that you're even finding some net wins, and then maybe we can expand on exactly what you mean there. But I think broadly, let's start off why you think explorers and where gold investors should look now versus producers.
Yeah. So gold's gone up 13% last year.
Hmm.
Gold producers, they had made a significant recovery,
Hmm.
I think about 55% from their bottom in
Hmm.
October 2022. At one stage, they were up as much as 80% from their minimum,
Hmm.
but they've given that back. Whereas for gold explorers, they have come down 70, 80% from
Hmm.
their highs in 2020. And the thing is, a lot of them are still only about 20, 30% trading above their minimum. Maybe
Hmm.
average is about 40%. Now, some of the best performers, some of the best explorers have actually um, jumped out, and they're trading 200, 300% from their lows.
Hmm.
And the fact that that's happening tells me um, I like to chase something before everyone comes in,
Hmm.
rather than chase with the crowd and
Hmm.
therefore run with the emotions, and I make bad decisions on
Hmm.
short-term trades.
Yeah.
I give props to my colleagues, Callum Newman,
Hmm.
Murray Dawes, because they're really good at timing the market.
Hmm.
That's what their bread and butter is. I'm on the other end, and I
Hmm.
like to camp out. And with explorers, we're watching a number of these companies now start to um, go up. But the share prices are moving 10 or
Hmm.
15% on a daily basis. They might go up 10, 15% and give it back the next day.
Yeah.
Now, that tells me someone is starting to move into that space.
Hmm.
And it's only a matter of time before we expect things to actually speed up. And
Hmm.
that's because you have the Federal Reserve. While they're saying that they're not going to
Hmm.
cut interest rates just yet, but every sign is showing that that's going to happen.
Yeah.
Um, there's only that much you can try to manipulate the economic data and say that we're in for a soft landing, and no one's really believing it.
Hmm.
If that is the case, you wouldn't just see the tops, the magnificent seven tech stocks jump to make all-time highs,
Hmm.
whereas with the rest of the smaller caps, they're actually going down. So
Hmm.
here's a graph of the US long term real yield with the US dollar price
Hmm.
of gold. And you can see that um, the rate rise cycle is pretty much it's over.
Yeah.
And now the market is pricing in rate cuts. But
Hmm.
furthermore, the only thing that the Federal Reserve is able to do at the moment to keep this going is to keep saying we might delay the rate cuts till when the economy looks pretty good. But it's all talk. It's BS in my view. And with most people in Main Street, they know it. People are losing jobs. People are
Hmm.
tightening their belts. And if the central bank doesn't cut interest rates now,
Hmm.
chances are they're going to be in a whole world of
Hmm.
trouble. And when that happens, you're going to see gold continue its run. And I'm expecting sometime this year gold to break past 2,100 US dollars an ounce and hold it. The next
Hmm.
stop would be 2,300 US dollars an ounce.
Hmm.
And that should send the mainstream media tongues wagging about, oh, is gold going to make new highs?
Yeah.
Now it's time to buy gold. Completely forgetting about the fact that they were talking down gold and laughing at gold bugs. And that's going to bring the money into gold stocks. And
Hmm.
gold producers, if they can deliver better operating performance, then we will see a recovery.
Hmm.
Otherwise, I think the money is going to go into the explorers, and that's where I'm excited, and I'm waiting there
Hmm.
for the money to come, and hopefully looking forward to triple digit or even quadruple digit percentage gains on some of my holdings.
Wow. Okay. Well, I think you mentioned interest rates. You mentioned the Fed. I think in the last few episodes, Greg and I have both said that we are focusing less on macro, and Greg
Mm,
sort of said his big mistake last year was focusing too much on things like the Fed. And when I raised this with you, you gave a very nuanced take,
mm,
and you sort of said, uh, gold is all about macro. So
mm.
why don't you maybe expand on that?
And I guess I'll give a hat tip to Greg because he was the one who pointed out to me the close relationship between the
Hmm.
US long term real yield and the price of gold.
Yeah.
And I think he's been tough on himself by saying that it was his mistake to focus too much on macroeconomics and not on the details and doing bottom up investing.
Hmm.
And I mean, to to explain that further, I think macroeconomics is important if you want to understand um, the rationale for the decisions you're making
Hmm.
um, in holding on to or selling some of your stocks. But if you're looking at the macroeconomic data for trading purposes and you're reacting to every single move that happens to
Hmm.
the markets, then that's definitely you really need to tune out of that. Reason why I'm focusing still on macro is because that is what still drives the price of gold.
Hmm.
And then it's the unemployment data, inflation data, and also what's happening with GDP and all that.
Hmm.
Because the Federal Reserve and the central banks they call themselves data reliant, and yet at the same time the bureaucrats are actually literally window dressing the data to make
Hmm.
things look good. You should all pay attention to the revisions of the data a month, 3 months, 6 months after, because you can tell that's where um, the true nature of our economy is. You only find out a month, 3 months
Hmm.
afterwards. So with gold, you focus on the macro economy. You read beneath, read between the lines and look at the things behind the curtains, and that's why you that should inform you on why you stick to your plan. Just as I'm currently sticking to my plan of not letting short-term movements shake me out of my core positions. I will tactically shift
Hmm.
some of my positions out of some of the producers and move them to explorers because I'm I'm looking for better value and better earnings potential in the coming months rather than um, trying to make pennies and
Yeah.
dollars in the short term.
Hmm.
So I think that's probably my take on it when it comes to investing in gold and gold producers. I'm still focusing on the macro, but I'm not
Hmm.
letting short-term fluctuations shake me out of my positions because I am looking at the companies themselves and focusing on ones
Hmm.
where they've got um, sufficient funds in their bank account. They have good quality property in terms
Hmm.
of good drill results, uh, deposits which are um, the grades are good,
Hmm.
strong, so strong ore grades, um, close to develop. And I'm looking at their development progress. Are they
Hmm.
close to moving on to the next stage? Are they going to build a mill? Any companies which have a mill on top of a deposit that is um, sizable, so more than 200,000
Yeah.
an ounce of gold resources, I'm paying attention to those because they can restart. And a mill is
Hmm.
definitely highly attractive because it costs nowadays $100 million to build.
Yeah.
So a mill sitting there is already 60, $70 million of
Yeah.
market value that the market rarely prices in. And I've
Hmm.
got quite a number of companies on my list that have that quality. So yeah, and I think there was one more thing that we wanted to talk about, net, wasn't
Net.
it?
Yes,
Yeah.
because we were talking about macro, but it's like you said, it's you're not focusing just on macro. You also focus on bottom up approach, and I think using that approach, you've actually identified some stocks that are what you describe net. And I think that's also what people like Benjamin Graham and stuff like that also used to find back in the day. So
Mm.
maybe you can just explain that to us.
Yeah, so I sent a note to my subscribers earlier this week to get them to watch a video that I have recorded with Takoa De Silva and my ex-colleague Lachlan Tierney back in
Mm-hmm.
August 2021. The link is still there. We'll hopefully share it in this video. So Takoa De Silva talked about how even in August 2021, he found net companies, but they weren't in
Mm-hmm.
the US, Canada, or Australia. They were located in, say, Russia,
Mm-hmm.
Africa, and parts
Yeah.
of South America. These are companies where they, the market capitalization is less than the
Mm-hmm.
cash net of debt. So
Yep.
when you buy that company, you're paying 90 cents on the dollar of cash that they've got, plus they've got assets. And these things only prop up in a very thinly
Mm-hmm.
traded
Mm-hmm.
and a not very well researched market.
Yeah.
And we're finding quite a number of these in, with gold explorers. And I just recently recommended a new company to
Mm-hmm.
my Gold Stock Pro subscribers for that reason.
Yep.
Yeah, so things are so bad that really good deals, really good opportunities are popping up. And for this to happen, you have to, you just have to go in. Now, are they gonna go up? Are they gonna rally in the next two months? I can't guarantee it. And you shouldn't bank on it. So you shouldn't be like, not financial advice, but I personally
Yeah.
wouldn't buy these companies with the expectation that I'm going to watch these go up
Mhm.
10, 50% in 2 months. I'm going to be patient with them.
Mhm.
And when the rewards come, they come and they're going to be
Mhm.
really big and they'll be worth it.
Exactly. Perfect. Well, do you think you have an event that you're hosting next week where you're going to talk about more of this in detail? So we will link that to that below. So if anyone is interested in hearing more what Brian has to say, definitely check that out. And also, if they just want to check out his services, Gold Stock Pro, and what was the other one? Gold Stock.
The Australian Gold Report.
That's the one. That's the one.
And you can, if you haven't subscribed to Fat Tail Daily, make sure you put your name down, and
Yep.
that's where you'll get notification of any of these events coming up, which including the Gold Stock Pro event, which is going to launch sometime next week. And I look forward to seeing all of you there. There will be a live Q&A session
Hmm.
afterwards. So you'll be able to put me on the spot on that day, and hopefully I'll be able to deliver.
Amazing. Well, with that said, if anyone is interested, definitely check out the event next week. But Brian, it was very nice to have you on the show, and talk to you soon.
Thanks very much, Kirill, and thanks everyone. God bless.